Hey, good morning, everyone. It's Coach Chris coming at you with a Friday midday report. I wanted to get this video out because I may take off early today, and so I wanted to make sure we got at least one video out there for you all today. Want to thank all my new subscribers. I really appreciate it, and I want to thank all my new customers who have bought the AccuTrader.net trading system, which is what I'm showing here on the screen right now. This is the price action so far today, starting at 4 a.m. Central Daylight Time. I am on Central Time Zone. And right now, as I'm recording this, it's 11:45 in the morning on Friday, the 16th of August, 2024. What you're looking at here is a 5-minute chart of the MNQ, the Micro E-mini NASDAQ futures contract. And let's get right into the price action here. There was no major news scheduled for this morning, so things got a little back to normal. We had a really nice overnight session. We've been seeing a lot more volume and volatility than normal overnight, which is leading me to kind of think that there may be some opportunities to trade. If those of you can't trade the New York session, there may be some trading opportunities. The only thing you have to be careful for is, like here, the algo triggered a buy signal, but there just wasn't enough. This is at 4:20 in the morning. You can see we got a little bit of a pop. Let me just see how many points that is. Yeah, that's only a 10-point pop, and then it never really went anywhere. It didn't go down. This came and retested the entry point, but it never really got anywhere because there just simply was not enough buyers to keep pushing it up. Not enough volume is the word I was looking for. And also, sometimes these indicators rely on volume and other data to signal the entry. And so if it's not getting a lot of data into the system, it sometimes will register a false positive on these off hours, pre-market, early morning, pre-market, late overnight. And you'll mostly be able to tell it because there'll be a very small ATR, and you can see how small these candles in here are as compared to now that the New York session is open. You can see, the size of the candles. So let's just get into what we had to trade. I wasn't up, but at 4:50, 10 minutes to 5, my time, we did get a sell entry. And it looked like a real nice trade. It developed over, 3 hours. It just continued with a lot of consolidation in between. But the initial thrust, which was from 4:50 till 5:10, you see this green X? That is the system signaling your first take profit zone. And then you can see there was several more much later. This is way at 7 o'clock in the morning. So that's 2 hours later. Then we got another big push down where in the meantime, we had just either a gradual downturn or a sideways motion. And you can see the baseline here. We did stay below that baseline the whole period. So you never were in any jeopardy by any means of going negative in the trade. But it just, not everyone is awake to monitor it. I guess you could just put a trailing stop on your ATM strategy and just let the thing run once you got this initial push down. So let's just analyze. Let's just take some measurements. I'm going to just use the ruler function here. So let's say you got in at this candle when you were triggered at 10 minutes to 5. The initial take profit right here is at 44 points. We did get 50 right. Nope, not quite 50 there yet. Had a little bit of a pullback. Like I say, nothing to put you in any type of jeopardy. And then the other push down. 76 points at the second take profit. 126 at the third take profit. And ultimately 173 points over the period of 3 hours, three and a half hours, if you would have stuck around for it. Really nice trade. I love this trade. Like I said, never in any jeopardy. So remember the criteria for entering. We get the entry signal and it stays glowing for at least 1 minute or at the conclusion, the close of this candle. This is a 5-minute chart. I forgot to mention that. It's a 5-minute time frame, which I found to be the most accurate for trading the system. We set a stop at the edge of this cloud. You can see this grayish area, or 50 points, whichever is greater. And in this case, the edge of the cloud is only 7 points away, so we would have set the stop loss at 50 points. Overnight, you can even go closer. You can even go 25 points just to limit your risk, because you can see by the size of the candles, we're really not going to get a huge, I shouldn't say not going to, but the likelihood of us getting a huge sell-off, real fast at that hour is not great. Now, we also had confluence down below on this bar graph down here. When it's green, the market is a go, buy. When it's red, only in conjunction with the signal up above. Do not rely on this solely. We're looking for confluence, and for me, confluence is 2 or more confirming factors to enter the trade. So you can see here, the trade was entered. We're clearly green. It had been green for a couple of candles, and then it continued on. We got a couple of red. I'm sorry. Did I say green? And then we had a few very small couple of green bars, but surely no reason to exit. X, take profit number 1. Green X, take profit number 2. Green X, take profit number 3. And another green X, take profit number 4. Now, I've had a lot of people question, well, when do you enter? What will happen sometimes is this red entry symbol will flicker. It very often it'll flash and then go off, flash, go off, and then, like I said earlier, if it stays illuminated for a minute or more, or at the close of this bar where it triggers, then enter. The reason it does that is if you see these candles, all of these candles, there's big wicks in both directions. And so it's the same as this candle was forming. It goes down and it triggers the software thinking it is making the start of the move, and then it'll pull back. And then the software will take the entry signal off. And it's with any candle, but especially in the entry. There's no need to front run this trade or to try and get in early. This bar here, okay, for instance, is 10 points, okay? So the ultimate overall trade is 170. So you can give up a few points at your entry because with this system, you're going to make them up at the tail end, okay? So that was the first trade. So then, as I said, there was no major news scheduled for today. And so the market is behaving a little bit more nicely. We're getting some up and down, and that's what this indicator needs, some oscillation. The last couple of days was news announcement and then just a steady crawl up. It never had any major pullbacks to re-trigger the algo. So we pulled all the way down, and then we started to retrace. This is 7:30 Central Time, okay? And so we're an hour before market, and you can see how they slowly bid this thing up till the opening candle. We had a nice big candle here, big wick. That opening candle was almost 50 points between the bottom, but you see, look at that long wick. I'm going to open this up, but look at that long wick on that opening candle. And then the market it took a little bit for things to settle down. You can still see another big candle, but it just kind of drifted around. And then at 10 minutes to 9, we got a green buy signal. Now, this was a really interesting trade because it's the first trade in a long time that we took any heat, what I call heat, meaning that the trade actually came against us after our entry point. So I'm going to use the trade tool for this. Hopefully it will be in an area where we can see it. So this was a short trade. It triggered on this candle. I'm just going to go to the midpoint of that because we don't know exactly when the green light was illuminated, if it was up here or up there. We don't know. So say we entered at the middle of that candle. Remember, our stop loss is, I put the wrong trade tool up. I'm supposed to use a long one. I put a short one up. Let's get rid of that. Sorry about that. Long position. Okay. Middle of the candle, we enter. Our stop loss is the edge of the cloud, which is 40 points or 50 points, whichever is greater. Okay? So 50 points would put us way down here. Let me click off that. I don't know if hopefully you can see that red shaded area here. And so you'll notice, I'm going to scoot this over just for a second because I don't want that. Let me line this up one more time. Middle of the candle. Yes, it is. Okay. So here's 50 points way down here. Here was our entry on this particular candle. So we immediately shot up into the green on our entry. That candle, just for reference, is almost 35 points tall, okay? So depending on where you entered in this candle, this next candle, you'll see, pulled back. And pretty dramatically, it got to the top of the body of that candle and then pulled back. But you can see our stop loss with the 50 points is way down here. The edge of the band is right here. And you can see we still, let me just measure how close we actually came. 10 points away from the band and then another 10 from the bottom of that. So we never were in any threat of stopping us out. But it like I said, normally when this triggers, we're usually in for a nice increase, maybe pull back to the bottom of that candle, but never anything where we take much heat. And that was the closest I've seen in a long time during normal hours that we did. And so I'm going to just move this back over here. I'm going to move that to the center just to measure out what we actually got. There is the red X up here indicating our first take profit, and that was 83 points. Okay, what a beautiful trade. Absolutely beautiful. Now, I do recommend most people take at least one contract off once you hit 50 points. Remember, folks, let's not get greedy. 50 points is $100 with one micro NASDAQ contract. I mean, if you want to make more money, obviously trade more contracts. But I mean, greedy people are the ones who are blowing these accounts. That's what's keeping these prop firms in business. Okay, because you're seeing all of these influencers on the internet making huge money, supposedly, which I have no way of knowing if they are or not, making thousands of dollars a day. You have to remember, most of those people are copy trading over 10 or 20 accounts. So say you got your 50 points times $200, you multiply that over, say, 10 Apex accounts, that's $1,000, 20 is $2,000. So I don't know that of anyone that makes $2,000 a day that is unhappy doing that, unless you're very egotistical. That's anyone would love to make that kind of money. There's even doctors and lawyers that don't make that kind of money in a day, and here you are just clicking a few buttons and doing it. So, and then say you traded 2, you just double that. So. Don't. There's no need to go for these home run trades. I mean, there isn't. Get that out of your mind if it's in there now, because there's no reason to think that way. So that was that trade. Another winner, really nice winner. I'm just going to get that trade tool off, and then after we got there, the market pulled back, and we had a real dramatic downsell here. Here, I forgot to remind you, green arrow here, confluence here. This over here, the market is open right now, this is what I call our thermometer. And this indicates, the color in the back indicates the current market direction. And this indicator, I don't know if you can see that little black square with the see how it's going up and down? This indicates the strength of the move in either direction. This will flash red when it's going down. And then this will go up or down depending on the velocity of the move. So here we're a little less than halfway up. So it's moving not to the max. See, it just popped up again. So we're starting to get some more velocity to the upside. So that's another piece of confluence that you want to watch also when you're entering the trade. It's kind of neat to watch, actually. So we pull back here. This is now about 9:30 in the morning. We pulled back, and I mean, we had a beautiful pullback, and I honestly was waiting. I caught most of this trade. I think I made $120, something like that, copied over a couple accounts. We had a really nice pullback, and I almost thought we were going to get triggered, and then it went back to touch our baseline, and it got rejected off of that. And I thought, well, okay, tested the bottom of the band, retraced up until the baseline, rejected off of the baseline, and you can see as this candle was forming, it went way down there, even further down than that candle did. And I thought for sure we were going to get entered into a short there, but it just didn't get down long enough to trigger the algo. And so then they suck up this liquidity here with that long bar, and then that gave them the fuel to run this thing right back up. And I mean, they went on a tear. Look at this. This is from the bottom of that candle up to here. That's a 175-point move. Now, the reason we didn't get another buy signal at any time through this is that this buy signal is technically still in place. Okay, I know it sounds a little different, but until we get a sell entry signal come, this market will remain in a buy mode, okay? What I call a buy mode. So it's not actually signaling your up move any longer. Any up moves will not get another entry signal until we get a red down symbol. I hope that makes sense to you. Now, normally, when you see a move in either direction, and I'll go back and show you another one, huge up move, and you can see the separation we're getting between the baseline here, this, I don't even know what color that, I'll just call it brown, and where the bottoms of the candles are, you can see that distance. In this case, it's 25 points. As long as it remains above that cloud, you're more than welcome to get in a trade and stay in a trade. Because, yes, it is going to revert back to the baseline at some point, or at least get closer. But when it's this far away, you can rest assured that is going to continue to go up. It just, the way that these indicators are set up, and then I'll show you, it was the same on this down move earlier, okay? Remember we talked about this trade? Look at how far of separation we got here. And then we went into consolidation, went back, and it touched that baseline, rejected off it, touched it again here, may have went through just a little bit, sent us all the way down. Now remember also that these lines, sometimes they will be respected to the tick, okay? Other times, you'll see here that little wick may actually pierce it and go a little through. What we don't want is candles closing above or on the other side of that line, because that's the first indication that the run is over. In this case, it was just probing, rejecting, probing, rejecting, and then it sent it all the way down, okay? But what I was about to illustrate is that even though we draw a lot of lines on our chart, these lines are actually areas. especially with the NASDAQ, the NQ and the MNQ, you have to figure there's a zone around here that is, as that actually is that area. So that's a fallacy that a lot of people have, that it has to go exactly to the line and stuff like that. Well, it doesn't. You can see here how it pierces a little bit through it. That's because this is an area. It can never be perfect, and the market is not going to be that perfect all the time. It's very close, and you'll notice a lot of times you'll put a trade in and it'll miss you by a tick, either on your entry or your take profit, and you get so mad, and you're wondering, well, why is that happening, and how do they do that? It's just the way the market operates. So I'm going to cut it there. That video is getting long enough. That's 20 minutes. I want to thank again my customers, but I do want to remind you that on the 20th, the AccuTrader.net system is going to be going up in price. Not a huge amount, but it is going to have a price increase, which is in 4 days. So if you're thinking about buying it, I highly recommend it. It's a great value. You're going to make close to twice what you pay for this in your first trade. So to me, it's a no-brainer, and then you're going to own the thing for the rest of your life. Normally, this thing will fire anywhere from 2 to 5 times a day. I would say 2 to 3 is a good is common. Sometimes you'll get more, and it all depends on the market, because like yesterday, we really didn't get much because it was all in one direction, which is rare. But it does happen. Most days are up and down. You're going to have a push up, pull back, push up, pull back. It's just a healthy way. Now look at how this is starting to come down. Remember, the market is live. If I was in a long, I would now exit it, because more than likely it's going to come at least to here in the next couple of candles, which is the baseline. And then it will either reject and go back up, which could be an entry for you, or if it pierces, it's going to come back down, and then it's got to come down and pick up some more liquidity. So if you're interested in the AccuTrader.net system, the link is in the description box below. Please, if you wouldn't mind hitting the like button down below and subscribing to my channel, I would really appreciate it. If I don't put up another video today, everyone have a happy weekend, and I will talk to you probably Sunday night. If not Sunday night, early Monday morning. So have a good weekend. Bye now.